Hello, everyone, and welcome to the Buck Stops here. I am Catherine Murray. Well, it's hard to believe we're actually in the back half of 2026, so I thought it's a great opportunity to take a look at the markets from a veteran on Wall Street and really figure out how we should best position our portfolios right now, particularly given the fact that we have seen a lot of volatility and some movement within the market. So, Kim Forrest is joining us. She's the president, founder, and CIO of Bokeh Capital Partners. Kim, always great to have you on and get your perspective. And I can say it equally. We're both, veterans who've been around a while. So
Right.
that's important, especially when you have markets like we are seeing today. But great to have you. And why don't we start there? How are you looking at the markets right now?
Well, I am looking and seeing a lot of moving parts. We've done really well so far this year because of our, I don't know, use of semiconductor stocks. We'll put it that way for in our sector neutral strategy. And the reason why 6 years ago I decided to really concentrate on semis instead of software companies is because I was looking, for the tech sector holdings in
Hmm.
that sector, weighted area. Anyhow, I was looking for new, exciting software companies, realizing that probably they're not ever going to come public like they used to as a small company. So, how do you play a new trend? Anytime you buy a new chunk of software, especially if it's enterprise, it's going to run on a new server. So, semiconductors, that's why, we were in that has done well. But looking at all the other sectors, they've done very, very well. Now, there's some companies that are not doing well, and they're for real business reasons. But I think the bias for this market, at least in the US, is that there is some fundamental um, calm beneath the storm that are making people buy and hold a lot of companies, and that gives you a little comfort in these stormy markets where the big momentum names are selling off.
So a lot to unpack there. In terms of that calmness underneath, are you saying that when you are seeing some of this volatility, you do believe that the institutional investors are buying those opportunities?
Yes, and it's kind of not just concentrated in the recent companies that have run up so high. Sure, there's people buying those that whenever they fall, but I think by and large, people are really very bullish in their longer term view of what the economy is going to do. And, you know, today we're taping this. We don't know if the Iran
Mhm.
war is back on or not. Who knows? But there is a bias in other sectors for the stocks where they were at the beginning of the year. They're higher now than in the middle of the year. And I would say that is showing investor confidence, even though we seem to have an absence of consumer confidence, right? Because that chart
Hmm.
is going
Hmm.
down, but stocks are
Right.
still going up.
Well, and I suppose as well that, one of the reasons to be buying, to your point about the strength of the US economy, is the strength in the earnings that we've seen. So it really has been, I think, this momentum to the upside when we see the upside is earnings driven. But let's talk briefly about the storm as well. What's causing this storm? Why are we seeing some of these big sell-offs, even including Samsung, which had incredible numbers, but the stock sold off?
Right. Well, I think people don't really have confidence that, we're going to have data centers pretty much covering the earth. And I say that glibly on purpose to get your attention. I think we're going to need a lot of data centers, but it's just my contention, knowing coming from software originally, that was my first career. And knowing what I know about AI, which was what I developed in my software career, that we're probably going to
Mm,
need probably 30% of what's currently on the books. But that 30% is probably even above what the semis have the current capacity for. So I think people were way over predicting what was going to be needed, but it's still more than what we have now. So there's still upward
mm.
movement there possible.
S- So, and the concern, I guess, in the market has been that that we will almost hit a saturation point. It's almost as though they're not recognizing that we actually need 30% more than we currently have to satisfy AI
Exactly.
data demand. We'll take a quick break. We'll be right back. Kim, I just want us to frame this for the viewers, this meaning semiconductor chips and why they're important. People might understand that they are in all of our, technology devices, but let's frame the thesis here, because if you haven't owned one of these stocks, you might not know enough about it to feel comfortable owning. You can always own an ETF, but talk to us about the big picture thinking as to why we might still want to be invested in semiconductors. Or maybe you think that the valuations are too high, although I did see today that Nvidia, I think, is at trading at 18, 19 times. So how are you looking at them today?
Sure. Well, I mean, you always have to look at, this, at least what we're talking about, on a company by company basis. And essentially, semiconductors are, the tools that software runs on. AI, artificial intelligence, has to build. What the developers do is they have software that they run tons of data through, tons and tons, like unbelievable amounts of data. And the program learns because the developers are telling it, this is good, that is bad. This is a cat, that's a dog. I'm just, kind of making things up.
Right.
But,
Yeah.
it's essentially learning, but it needs lots and lots of processing power. And that's what we're talking about here. And originally, people got to use OpenAI, had that experience that they're talking to a computer. The computer feels like a person. It is not. But that ability to decode English language, go out and do something, and then come back and tell you that is what AI is to most people. To me, AI are these models that can be used in many different instances and may not need all of that language processing power that OpenAI specifically needed. And I think most of the models that Wall Street was building, not AI models, earnings models, were assuming that the need for data centers would only grow because we would need not one OpenAI, but hundreds of OpenAIs. I don't know that that's true. And I think that is the thing that has fractured the momentum investing in AI, is when people are going, what if we only need tens of OpenAIs, not hundreds of OpenAIs? And that
Right.
has been
Okay,
the
so there.
chilling issue on investors and semiconductors.
Interesting. What do you believe?
I believe that most of the really productive stuff are going to be much smaller models and more akin to, if you've ever looked into Palantir, they have a platform, but they're solving much smaller problems than OpenAI is. And not just wide ranging, go find this information for me, but I have a device, when is this going to fail? I have a smaller problem. And those are the kind of things that we still need lots of compute power for. We'll need lots of people to be able to build these models and make sure that they're correct and run them. And those are the kind of, I call it small AI, that I think is going to be the productive mechanism that actually pays not only the people use it, but the investors that invest in it. And that's important. Don't invest in technology because it's cool. Invest in technology because it enables people to become productive.
So what falls under that category for you?
Stuff that isn't invented quite yet. Or
Oh
that's,
no. I
I'm
mean stock
serious.
wise. Stock wise.
Oh, stock wise. Well, I would still play
Yeah.
it with semiconductors because I would love to, invest in software companies. That's where I came from. I understand them, but it's not possible. I'm not private equity, right? So that's why I like semiconductors and why I kind of cast a broad net in the semiconductor industry, because many different kind of compute styles are needed. So almost anywhere where you would throw a dart, there is probably a solution for a semiconductor company that you like, that could, is going to fill that demand.
I'm surprised. So like a Micron, an Nvidia, all of the above.
Absolutely. And, AMD, oddly enough, Intel,
AMD.
Broadcom. So all of these companies are, very different providers of semiconductors. And yet they have a place in today's AI, and they will likely have a place in tomorrow's AI as well.
Hmm. I'm wondering as well how the demand from SpaceX might impact the
Mm.
semiconductor industry as well. We'll talk about that right after the break. Kim, I want our viewers to understand that you do cover other sectors, but I also know, given your background coming from software and as an engineer, I'm taking more time here because I know you know. So I'm really curious about how you are looking at SpaceX and, bringing it back terrestrially in, as it relates to what might be interesting plays or not. If in fact we'll see those data centers in space. What does that even mean for some of the plays that have already been happening here?
Yeah, well, I think a lot of what SpaceX is going to become is far in the future. And I'm a future investor, right? Anytime you're going to talk to me, you have to understand the next 15 minutes of investing is not interesting to me. It's the next 3 to 5 years. That's where I live. And I think seeing what Elon Musk has for SpaceX is probably 10 years away because it just takes that long, right? Um,
Hmm.
Probably the most interesting product that the guy has right now is the and I'm drawing a blank on it, the
Yeah.
satellite
Starlink.
connectivity. Starlink.
Oh, okay. Hmm.
Phenomenal. I've read a couple of things this last week that maybe he's going after the phone companies because he can do it all from
Right.
space. Of course he can. Okay. But I
Yes.
don't know how practical that is. And I certainly don't think phone companies go away. This is something nobody ever talks about. They are the internet. If you are, I don't care if you're on your phone or on your PC or even on your TV and it's hooked up to the internet, there are zeros and ones that are flying all across whatever country you're in. And it goes mostly through the ground, right, in optical networking. And then it might come to your house again by fiber optics, or it could come through the cell phone and or like
Hmm.
Starlink. But a lot of that goes through the earth, and if it's doing that, a phone company is getting a little bit of money from it. So don't lose heart on those names quite yet.
Hmm.
Elon's coming for them, but I don't know that he'll be able to replace them in its entirety. But as
Hmm.
far as data centers in space, I can't I don't think that's in the next
Hmm.
3 to 5 years. So don't really
Okay.
pay attention to it. But God bless him.
Hmm. Well, are you tempted to buy the stock?
No, no, because there's so much the actual like big money consuming part of what he's doing is essentially working for governments to do space travel for them instead of, you know, NASA or whatever the local country oriented spending is, and that is all government spending, and it's highly discretionary government spending. So I'm not
Okay.
particularly interested in SpaceX because of that. It's so weighted towards that. And I'm practical, if
Hmm.
nothing else. I
Right.
want them
Well,
to
Kim, I guess
succeed.
I'm not. I guess I'm not practical. I am so all in.
Well, I
But
look
that's
where the money's
okay.
coming from. Yeah, that's
Well,
all.
yeah. I guess I look at it as the next industrial revolution of sorts. And the company, interestingly, is 20 years old. So even if it takes 10 years or 5 or 3 to 5, we'll see. But enough of SpaceX. I want to get your take on something else that's been going on in the market, which guess last week, I had a biotech analyst on last week because I thought, at some point, is biotech not dead anymore? Where do you stand on biotech?
I think a lot of it is on the precipice of working, right? And again, going back to my very practical kind of take on things where I want to root for something, but I may not invest in it because it's not it doesn't have the cash flow that I need to feel comfortable owning a stock. But that being said, the whole biotech kind of space is R&D for the pharma companies. And there are many, many biotechs that are working with a large partner, a large pharma partner, that on, trials that are nearing the phase 3 trial where it can actually be prescribed by doctors. So I think that is a lot of the reasons why the Russell 2000 has really blossomed this year, and why a lot of small caps have, because the biotechs have been leading them. And these are biotechs that, I guess, as I said, are on the precipice of success, that they will have a product that actually is recommended by doctors and then bought by a large pharma. And that's your exit strategy in those kind of stocks.
Okay, we'll take a quick break. We'll be right back. Kim, we've covered biotech, we've covered a bit in tech. Actually, mind you, we didn't talk about Google or Apple's of the world. We should have. Shoot, maybe we'll get to that. But when you sit back and think about the next 6 months or so, what are the themes people need to be thinking about as it relates to making money in the markets?
Sure. Well, we've come out of an incredible quarter where it felt like a lot of stuff went right. Actually, the first half of the year, if you would say that the market would be up as much as it has been, and there was a, pretty sizable amount of geopolitical issues going on, nobody would have believed you. Nobody, right? So we still have geopolitical issues going on. Some stocks have fallen off. What's going to happen on the back half of this year? As I've said in an earlier segment, I'm not really interested in short term, but I want to direct you as an investor to thinking a little bit differently, maybe. And especially if you are heavily invested in equities or maybe ETFs that represent, a combination of equities. And this is what I have to say. If you're an equity investor, don't get dragged down by people that are going to tell you every wrong thing that is likely to happen in the future, and try to protect yourself against those wrong things, although you should know about them. If you're an equity investor, you should be looking at companies and asking yourself, what could go right with this company, and should I own it? Because I think that's equally important, or even more important, than understanding what risks there are, but understanding who has the impetus to drive your portfolio higher and invest in that. And maybe that's where we talk about Google and Apple. But I think a lot of people really want to sound smart, and they talk about negative things. Go ahead. Sorry.
Yeah. That's easy to do. You're right. And it's counterintuitive. Let's talk about Google and Apple. Where do you stand on both of those stocks?
Well, I think Apple got AI completely right. Okay. I know this is mind blowing. A lot of people were like throwing them under the bus because they hadn't like really delivered on AI. A couple of years ago, they were supposed to deliver something, they didn't. Here's what I love about Apple. It's a hardware company. Sure, it makes software to enable its hardware, but they knew who they were and didn't chase after it. If you look at Meta, Facebook, whatever you want to call them, they dumped an inordinate amount of money into AI, and I could never figure out why. Like, it didn't really fit in with their product base. It doesn't solve any of their problems. But Apple absolutely did the right thing, where it's going to buy access to AI and be the delivery unit. And I think Google does that as well.
Right. Yeah. I know both were kind of on the sidelines. I bought Google just, when it was so disliked over a year ago because of those issues. And then I've been on, I did buy Apple as well, but it's been a bit of a waiting game. Let me ask you about Amazon.
Actually, we own Amazon because for 3 reasons. One, we thought, that is a natural fit for them. They already do cloud computing and AI computing to lease to others. That's just, kind of more expensive cloud computing. So that's good. Secondly, I find it difficult to find things. I find it difficult to use Amazon to shop as opposed to buy. If I want to buy something, I know how to do it. But like, give me a better experience, maybe through AI. I think that's a noble use for AI. And then finally, I think they're smart enough to develop AI and to be able to do that. So I think
Mhm.
they are well positioned to continue to do what they're doing, their strategy in the AI area.
That's actually really fascinating because you're right. It's easy to find something to buy on Amazon, but not as easy to shop. I didn't even know that they
Right.
sold some kind of cute little knockoff outfits until I asked a girl where she bought it, and it was off of Amazon. I mean, that's probably a ton of opportunity using AI to figure out how to push product.
Exactly. And I would ask her, how did she find that stuff? Because I want to know that secret too. I don't know how to use it.
That is true. That is true. Just lastly, anything in consumer that you like right now?
I love Urban Outfitters because it's skews higher, and we own this. It's a higher end, demographic,
Okay,
and they just seem to be able to execute. So love them.
we'll
So
take
yeah,
a
I
look
think
at
the
it.
consumer's unloved.
Okay, well, great to see you, Kim. Thank you.
Thank you.